is that none of these are isolated events. They're what I call force multipliers, combining in a way that could already undermine your savings, send prices for most things soaring, and blow apart the U.S. market. But now there's been a much more alarming development. In short, on Sunday, October 15th, there's a single event scheduled that could topple the last domino and trigger the final end of the American empire. Pay close attention, because this message isn't just another warning about the dollar. What's coming is much, much bigger than just a currency move. We're about to witness a complete rewrite of the global financial rules, ending with the destruction of the entire American empire and all the influence and worldwide dominance we've come to take for granted. If you plan to have any money at all in the stock market, in US-based bonds, CDs, or savings accounts, even in gold, you need to take steps to protect yourself. I named 3 of those steps below. I'm urging you right now, please pay attention. There's a reason we don't speak Latin in boardrooms, movies, or on the nightly news. It's the same reason India is no longer a British colony, and that the French and Dutch no longer share huge tracts of Africa. In short, it's because empires, all of them, end. I'm writing you now because it's America's turn. As a citizen that served my country many times before, including advising the U.S. intelligence agencies on matters of national security, believe me, I take no pleasure in seeing our empire crumble. I don't want to see these events play out. But the fact of the matter is this: it's simply too late to reverse course. Because on October 15, 2017, a Sunday morning, in a room that hosts the world's most powerful financial elite, a long-awaited, fully scheduled trigger event could take place. When it does, you could see the already rapid decline of the American empire pick up pace. How so? Like I said, my name is Jim Rickards. I spent the last 43 years studying the combined impact of exactly these kinds of events. For 35 of those years, I was both an attorney and risk analyst on Wall Street. I've warned investors in 2 New York Times bestsellers, Currency Wars in 2011, The Death of Money in 2014, and in my latest book, The New Case for Gold. Maybe you've also seen me making the rounds on just about every major network. I've been showing up on Fox News, CNBC, CNN, and Bloomberg. I've been called in to share my findings with the CIA, the Pentagon, and other high-level insiders in both Washington and on Wall Street. Time after time, I've laid out the case for how our reckless Fed, the rise of digital cash, and our global currency wars are already targeting the U.S. dollar and our way of life. Most recently, I told investors to watch out for a very specific attack on the dollar that would take place on September 30th. On that date, I said the world's most powerful financial body would release a new form of money specifically designed to replace the U.S. dollar as the world's reserve currency. That release, we call it world money, did happen just as predicted. And those are just some of the reasons that I famously called for gold to climb to as high as $10,000 an ounce. Yet, as worrisome as all that is, now there's something more, a new development that still lies ahead, and one that should alarm you more than all these other events combined. I promise you, not one American in 100,000 knows about this threat, let alone how it could shear the top off the U.S. stock market, how it will cannibalize your retirement savings, and why it's this event that could speed up America's rapid decline. Before I tell you what it is, let me show you what it could mean. Soon after this trigger event, you could see central banks worldwide empty dollars from their vaults to make room for the replacement currency I've just told you about. You'll see just how fast the world stock markets can fall off a cliff, faster even than in 2008, as governments and Wall Street scramble to adjust to this new reality. You'll find out just how fast an event like this can gut your savings account too, and hike up the prices you pay for everything, from fancy gadgets to basics like groceries and gasoline. Soon after this trigger event takes place, you'll see our global credit card get snipped in half, as the world loses every last reason to tolerate our exploding piles of debt. You'll see our leaders completely humiliated on the world stages, losing all leverage in all their negotiations, from world trade to a global response to terrorism. You'll see U.S. tax rates soar in response as D.C. loses its sway at global treasury auctions and scrambles for another source of cash. You'll see how this development cuts into government social programs from Social Security to Medicare, and cuts our spending on highways, bridges, and border security. You'll even get to see inside a Swiss gold vault as I show you what our visit reveals about how other countries, especially China, have been prepping for this power shift for years. Will this be the ultimate monetary apocalypse? Not exactly. In fact, it won't even be the first time we've seen a currency implosion in the past 100 years or so. We've had others in 1914, 1939, and 1971. What I am warning you is that this new trigger event in October will speed us faster toward the next collapse, more so than anything else we've seen this year. First, it will amplify the trend. Then it will knock away the final pillar that's holding up the American empire. It's got nothing to do with our new president. It's not a terrorist attack. It's something far simpler, far less obvious. It's a financial event that will make the end of the U.S. dollar, and by extension the end of our reach as an empire, inevitable, and much sooner than most of us imagine. Fortunately, there are steps you can take to protect yourself. I'll spell out 3 of them here. All 3 are steps I hope to take too for myself and my family. None of them are complicated. All of them could shelter you during this next phase of the coming crisis. The first will show you how to hedge yourself and your wealth against what could be a rapid backslide in the U.S. dollar. It could even show you an extraordinary 8-to-1 return. The second reveals how to avoid what could easily be another 2008 level wipeout in stocks. Specifically, there are toxic, well-known shares you'll want to dump. Plus, you'll see how to make money on the same downward move. In my own career, I've made gains on falling shares as high as 3,000%. Then you'll see a radical new way to get ahead of this trigger event, and the move to dethrone the dollar that could follow by owning a stake in a currency set to replace it. This last move would normally not be possible for most regular investors, but I found an original accessible way to do it. I know of nobody else who's identified it. The bottom line is you don't need to feel helpless. Not only can you use what I'm about to show you to preserve your wealth and protect yourself long after the fallout from this October trigger event, you could get richer too. That's what history's wealthiest investors always figure out how to do. It's what I want to show you how to do now. And once you're ready, there's more. Including a simple formula I've worked out for gold buyers. It shows you exactly how much gold you should own according to your total net worth, plus what kind of gold, where to buy it, and how to safely store it. You don't want to keep it at a local bank or in a safe deposit box. Also, there's an extraordinary way to lock up returns as high as 30 times your money if this coming dollar collapse goes as deep and as far as I expect. But before we get to any of this, let me tell you a little bit more about where this warning comes from and why I'm in such a unique position to help you survive it. As I've said, if you haven't already seen me on the national news shows, you might know me from my 2 New York Times bestsellers, Currency Wars and The Death of Money, and my latest work, The New Case for Gold. For 35 years, I worked not just as a lawyer, but as a risk analyst on Wall Street. I ran the market intelligence firm that exposed new global currency manipulation. In 2009, I testified in front of Congress about financial modeling and the 2008 crash. But it's my work behind the scenes that gets me special access most others don't get. For instance, maybe you remember Long-Term Capital Management, the giant hedge fund that blew up in the 90s and almost took down the entire world stock market. I was the lead attorney on that case, called in by the Fed to negotiate the bailout. A few years later, the CIA called me in just after planes hit the Twin Towers in New York. They wanted me to help scan the markets for strange big trades, like big bets on airline stocks. We figured it would help us expose even more planned attacks. In 2010, I did something similar involving New Scotland Yard. We used my risk models to uncover a terror plot in London just days before it was set to happen. And in 2009, I got called in for a closed-door meeting at the Pentagon to create and oversee their first-ever financial war game simulation to expose security weaknesses in U.S. banks. The good news is that my team and I won that game. The bad news is we were playing as the Chinese team. Listen, bottom line is this. I've spent years cultivating these same risk analysis tools I'm about to apply for you today in this presentation. In all that time, the alarm bells have never rung as clearly as they're ringing now. You'll need to understand the risks. You'll want to know what to do to get ready. And you'll want to do all of it well ahead of this October trigger event and its outcome. Otherwise, you could lose everything. I'm in a unique position to help clarify that risk. I'm in an even better position to show you how to protect yourself and your family from the coming fallout. Now let me tell you what this event is and why it could have so much impact. First, let me ask you this. When you hear the phrase financial elites, who comes to mind? George Soros, Warren Buffett, Bill Gates, Trump, or Bloomberg? They're rich, but they've got nothing on this crowd. I'm talking, of course, about the group that runs what The Economist calls the most powerful financial institution on earth. A group that's got their finger on the button of the entire global economy and holds the fate of trillions of dollars hostage with just a few strokes of a pen. Maybe you've guessed. I'm talking about the heads of the International Monetary Fund. But what's that got to do with this trigger event coming for this fall? Consider, the IMF has 189 member countries. And many of these countries would love to move away from the one thing that's made the American empire so powerful over these last 70 years. Not our military might, not our diplomatic reach or our ingenuity, but nothing short of the current worldwide dependence on the fate of the U.S. dollar. Up until now, it's the dollar that fills the central banks of the world, and the dollar that's used for just about every large-scale transaction between nations, even those doing business with partners other than the U.S. You can't begin to imagine what huge advantages that's meant for us as masters of that reserve currency, or what a drag it's been on other economies at the same time. See, dollar reserves come with baggage, namely our explosive $19 trillion in debt. Meanwhile, the member countries look at the IMF and it seems like an oasis by comparison. They've got no wars or no roads to pay for, no welfare recipients, and no social security checks to write, and nothing close to our levels of debt. For the rest of the world, the IMF has the last clean balance sheet. And the way they see it, it's the IMF, not the United States, that should hold the strings to the world's purse, with centralized money, a centralized market, and even a centralized government. The centralized money these other countries could use already exists. It's the world money I told you about earlier. All that remains is the vote to swap it into place. This is what could follow the trigger event on October 15, 2017. Up until now, only one country in the IMF's 189 member countries had enough power to veto a vote against the dollar, and lucky for us, that country was the United States. See, the way the IMF works is each country gets a certain percentage voting clout. Here, take a look at this chart. As you can see, the U.S. is the only country with a percentage over 15%. That's exactly enough voting power to veto any IMF proposal. Up until now, it's why it's been easier for the U.S. to call the shots. However, this coming year, 2017, those quotas are set to rebalance, and they're going to rebalance away from U.S. interests like, say, keeping the dollar as the world's #1 reserve currency. How so? Maybe you remember hearing about the BRICS countries. BRICS stands for Brazil, Russia, India, China, and South Africa. Not one of those countries is a match for the U.S. on the voting floor or in the world economy, but banded together in 2017, they'll finally have us beat. Consider our share of the world economy has plunged by nearly half since 1960. We're now cranking out just 25% of the wealth of the world each year. The BRICS have soared in size with combined economic might that's nearly triple what it was in the 1990s, bigger than the size of the EU, and nearly equal to the United States. When that chart you just saw was made, the BRICS share of the vote totaled 14.2%. At the G20 meeting that just happened, it bumped up to 14.89%. Remember, you need 15% at the IMF to get veto power. In fact, Vladimir Putin himself said at that meeting, "We're a step away from the 15% blocking threshold. Without a doubt, we have to move forward to carry out an IMF reform." This is exactly the move that will get triggered by the event in October. The G20, including Obama and the IMF, have given a written promise to crank up the BRICS voting rights to match with their relative positions in the world economy. Allow me to translate. The BRICS now run 22.4% of the world GDP. They now get just 14.9% of the vote in world financial decisions. They only need 0.1% more to get veto power. Chances are they'll get more, as much as 16% or 17%. So let's take a look at that same pie chart again, and keep in mind they only need 15% to match the total U.S. firepower and votes. The bottom line, if the BRICS gain enough firepower to veto U.S. proposals, they could twist arms to the other member countries against our interests. Once they've got that power, will they use it? Keep in mind, this is the same BRIC group that was so anti-U.S. control, they launched their $100 billion BRICS New Development Bank in July 2015. It's the same group that was so intent on skirting U.S. wiretaps, they launched a plan to start building their own undersea internet cable back in September 2013. And it's the same group that at this most recent G20 meeting actually broke off and had a mini summit of their own to figure out how to force this vote reform. They are not hiding their intent. And this is not a prediction or a guess. This is a fact. And the fact is, the BRICS will soon have the clout they need to make this a very different world. A world that's less focused on the U.S. as the #1 economic power. And there's nothing anybody, not even President Trump, can do to stop it. That's why I've chosen to forego advising the U.S. government this time around, because it's too late for them. Instead, I'm here advising you, my fellow American, on what you can do while you still have time to prepare yourself and your wealth for this huge shift ahead. And what do they plan to do with all this veto power? All of them make no secret about ending the reign of the dollar. In fact, behind the scenes, these nations are already maneuvering outside the dollar. For example, did you know that Russia and China have already cut a deal to allow their currencies to trade against each other without the dollar involved at all? Or did you know that India, China, Russia, and 20 other countries have already set up lines of currency swaps that allow them to trade without using the U.S. dollar? After October 15th, these nations will not have to operate in such secrecy anymore. Instead, they'll have the votes, the new IMF world money, to make it happen right in front of everyone's eyes. They'll abandon the dollar and put in place this new world money at exactly a time when most Americans are least ready. In fact, I'll bet you not one American in 100,000 has any clue what this event will mean for their money. Why are so many Americans in the dark? Simple. Unless you were born before 1944, there's a good chance you've got no idea what it's like to live in a world where the dollar wasn't the world's most powerful form of cash.
That status comes with huge benefits. Benefits most Americans have no idea they enjoy. Did you know, for instance, that 85% of all the transactions that take place between other countries outside of the United States take place in U.S. dollars? Say China buys a dozen shipping containers full of French Bordeaux. They don't pay with yuan or even euros, they pay with dollars. If Canada imports a few hundred Honda Civics, they don't pay with Canadian cash or Japanese yen, they also pay with U.S. dollars. The same goes for England when they buy Saudi oil, or Brazil when they import Swedish chocolate. As of right now, all that money gets transferred as dollars. Why? Because using one kind of money makes it easy, and dollars up until now have felt stable. That's why dollars make up more than 60% of reserves in other countries' central banks. You might not know it, but we've got a lot of perks as long as this remains true. For instance, dollar dominance is one reason you pay only $2 a gallon for gas, while drivers in Italy fork over $6 per gallon, and they pay $7 a gallon in Oslo, Norway. It's why China and Japan have lent us trillions of dollars, and why our government thinks they can just keep on borrowing that money forever instead of getting their books in order. It's why you still get a welcome mat when you whip out American money overseas, especially in countries that still cling to the idea that America's got a stable economy. The list goes on. But what happens to those perks once the dollar's top dog status just disappears? Make no mistake, you'll lose every one of these perks. When world money takes over, the first thing that America loses is our number one export. No, not cars from Detroit, not shale oil from the fields of South Dakota, not steel or movies or info technology. As you read this, our number one export is the dollar itself. That's what we're doing when we buy anything from overseas. We offload tons of stuff from shipping containers and send back hundreds of billions of dollars in return. That exchange only works while they still have faith in the greenback. What happens when faith in the new world money takes over? Again, simple. Suddenly our VIP treatment goes away. We have to line up for special deals and special access to markets just like everybody else, and pay the same exchange fees for the privilege. Translation, you'll pay more, a lot more, for just about everything. Here's something else. Right now, more than 20 currencies also peg their money to the dollar. That means they keep their money strong by backing it with our money parked in their reserves. What happens when world money suddenly becomes the better option?
Bank vaults worldwide could opt to swap dollars for world money. This could send a tidal wave of cash back to the U.S.
And you know what happens when there's too much of anything? It makes everything that's there worth less. Imagine paying twice what you pay now to buy a car, an iPhone, or gasoline. Companies that do business overseas could see every cost advantage vaporize. Will that bring jobs back home too? Don't count on it, because weaker dollars will make their costs soar here too. You could see mass layoffs. Some companies will just shut their doors forever. They won't have any other option. Of course, that will slam the stock market. As global investors flee, you could see stocks crash 50%, 60%, or more. Meanwhile, what happens to that steady flow of borrowed dollars from China, India, and Japan? Nobody will want to get paid back in dollars. They'll want world money instead. You can imagine the shock and embarrassment when a cashier takes your credit card and cuts it in half. Now imagine that happening on an international scale to the U.S. government. When our politicians can't borrow from overseas, they'll only have two other options. Either print the money and risk even more inflation, or take it by theft with European-style taxes. Either way, you lose. But maybe you're asking, why now? After all, hasn't the dollar been dying for decades? Yes, it has. Take a look at this. As you can see, our money has plunged a staggering 96%, starting with the day our Federal Reserve opened its doors. If you got that return from any other investment, you'd dump it immediately. And yet we're used to this. We accept it. Of course, we tell ourselves all prices go up. It's natural to pay $500,000 for a house that once sold for just $10,000. It's natural to fork over $40,000 in tuition for a college that once cost $400 a year. It's normal to pay $5 for a Coke in a restaurant or $60 for a ticket to a ball game, because that's what paper money does. It dies over time. In fact, did you know that there have been over 3,400 kinds of money that work just like the dollar? That is money that's backed by nothing but the faith of the people who use it. And guess what? Every single one of them has failed. On average, most didn't last longer than 27 years. After 72 years on top, the dollar has already lasted for triple that lifespan. We're lucky it's still standing at all. But how much longer can that last?
When a country is divided as ours, with our economy in shambles and others joining forces against us, and with pitiful leaders adding debt by the trillions, not long at all. Even without the coming trigger event in October, the stars are lining up for a dollar collapse. What's different this time is that, for the first time in the dollar's history, we've got an actual deadline. A date when it could all go down. And believe me, I'm the first to tell you that I'm the lone wolf with this kind of warning. Just look at how even the mainstream has started to echo a similar story. Here are the actual headlines from the papers that even your typical mom and pop investor would follow.
The Wall Street Journal writes, quote, "The single most astonishing fact about foreign exchange is the extent to which the market remains dollar-centric. The dollar's reign is coming to an end," close quote. Well, quote, "Within a decade, the dollar could be replaced as the world's reserve currency," close quote, warns the UK Telegraph. And from the Huffington Post, quote, "The International Monetary Fund issued a report Thursday on a possible replacement for the dollar as the world's reserve currency," close quote. Finally, The Guardian reports that, quote, "China has called for the replacement of the dollar as the main global reserve currency. Russia said it would put forward a similar proposal," close quote. Point being, the fix is in for the dollar, and it has been for a very long time. In case you think this is the first time there's been a global conspiracy against the U.S. dollar and against the middle-class Americans who earn, spend, and save them, think again. Take what happened in 1985. Germany, France, Japan, and the UK got together and whacked the dollar so it would plunge an incredible 51% over the next 2 years. You'll never guess who orchestrated that crash. Not the Germans, not Japan or France, not the UK. It was our own Jim Baker, our Treasury Secretary at the time, in a closed-door deal called the Plaza Accord after the swanky Manhattan hotel where it was signed. Why? Because even though you and I lose big when the money gets destroyed, weak dollars are like rocket fuel for the political and financial elite. They make everybody spend and feel rich, at least for a short time. And I'm sure you remember what happened next. U.S. stocks took off, real estate took off, Wall Street ruled the world. Then it all fell apart. The dollar plunged so fast that we needed another closed-door deal to stop it. Wall Street plunged 22% in a single day. That's like a 4,000-point drop in today's market in less than 24 hours. In short, this isn't the first time global elites have messed with your financial security behind your back. How can you be so sure this attack on your cash won't stop? Take a look at what happened just this past February 26th. In a backroom meeting during the G20 summit in China, world financial elites agreed to another deal to crush the dollar. My insider friends call it the Shanghai Accord. Put simply, the global monetary mafia sold out the dollar to give a boost to Wall Street traders and the political elite in Washington, D.C. and Beijing. Remember, cheap money is like rocket fuel. Unfortunately, just like rocket fuel, it burns out fast. To keep the party going, they'll have to keep making the dollar weaker and weaker until there's nothing left. That's not easy when the dollar is supposed to be the safe money for the rest of the world. Still think nobody would actually plan to crash the dollar? Here's the smoking gun.
Buried 7 layers deep on the IMF's website, you'll find a 42-page blueprint that lays out this entire plan. It's titled Enhancing International Monetary Stability, and it's so packed with jargon you can barely read it. But it shows in explicit detail how this move away from U.S. dollar reserves and into this new form of world money could take place. What could possibly make the new world money more attractive than the dollar? Remember, while the idea of one central bank and one central money might sound like a catastrophe to you and me, it's a financial utopia for the newly empowered other IMF nations. And no surprise, it's the IMF that just backed the release of this new replacement world money earlier this fall. That's no coincidence. Make no mistake, this isn't just a minor financial blip. It's the start of a new world order, with America less in command of its own fate than ever before. You think Congress is bad? Imagine getting clearance from the IMF the next time we want to build a new fighter jet, fix our bridges, or bail out our banks. Medicare and Social Security are a disaster. Obamacare is headed in the same direction. Can you imagine what happens when the IMF decides how to fix those budgets instead? Because that's where we're headed. As I said, these are the same kinds of steps I'm ready to take myself. You should consider doing the same. Just make sure you do it soon while you still can. Let's be clear, in the days just after this October 15th event, you'll wake up to a world that seems not so different. Traffic lights will still flash, grocery stores will still take your money, your ATM card will still work. A lot of the crisis will still lie ahead as we await the shift in power. Maybe you'll notice a tick upward in the price of milk, but no big deal, it will still be an anticipatory threat. But as the world starts to get it, get ready for a multiplier effect. By the end of the week, maybe you'll see the prices jump at the gas station too. With dollars getting weaker, everything will soon cost more to pick, ship, or stock. Soon you'll pay a little extra for apples at the fruit stand. At the coffee shop, they'll tack on another quarter on the price of a latte. Online prices will go up when you buy anything tech because all that's imported, and it costs more to get it out for delivery. On Wall Street, all kinds of ledgers will start to ooze red. The multinationals will get hit first, and that's where the crisis will accelerate. As dollars lose clout, paying an overseas workforce will lose luster. Sweetheart import deals will dry up, and so will international tax treaties until cheap goods no longer exist for Americans. With borders closing and prices soaring at home, companies will shutter their factories. Decades of job gains will vaporize. On Wall Street, frustrated investors will throw in the towel. In Washington, the Treasury holds a sale on U.S. debt, and nobody shows up, leaving no choice but to hike tax rates higher. In short, the rules will get rewritten right before your eyes. Still think it's impossible for the whole system to reset so quickly? Think again, because it's happened before. Consider the clear-cut meltdown of 1914 just after a bullet felled Archduke Ferdinand. That too signaled a sudden shift in power. Before a single World War I soldier even hit the ground, the world financial markets imploded. Bank runs seized over 50 countries. Stocks everywhere started to plunge. The Bank of England froze all withdrawals, and European exchanges halted all trading.
Even the New York Stock Exchange closed down from July 30th to December 12th. That's nearly 5 months with no access. What would you do if you couldn't access your 401k statements for 2 months, a month, or even a week as the financial world collapsed? Keep in mind all this happened when most countries still had the gold standard backing their cash, and when there was no internet or around-the-clock trading to help the crisis go viral. Today we've got digital cash that can disappear with a mouse click. We've got 24-hour trading so the pressure never lets up. And we've got global banking for a more massive tide of selling. Imagine getting cut off, not just from your retirement statements, but from your day-to-day cash accounts the way they did in Greece, with no money to cover even a few days at a time. Imagine watching helplessly as your 401k goes to zero in a matter of hours. Or imagine grocery stores with jammed checkout lines and empty shelves as far as the eye can see. Will I get another emergency call from the Fed like they did in 1998? Will the CIA tap me to look for market anomalies the way they did after 9/11? Will I get a call from the Pentagon? I really can't say. All I can tell you is I don't want to wait to find out. As I said, I'm taking 3 steps to protect my family and our money. Let me show you what those steps are now. Step 1. Load up on real gold before it hits $10,000 an ounce. This first step is pretty much a slam dunk. You want to get gold as soon as you can using a very simple formula to determine how much you should get. I'll show you this formula in just a second. It works if you've got $5,000 or $5 million. But first, let me reassure you that you won't be alone in making this move. Take billionaire investor George Soros. Love him or hate him, he's a master at getting rich during busts. And what's he doing now? He just dumped a third of his U.S. stocks and staked $264 million on gold. Then there's billionaire Stanley Druckenmiller. He's worth $4.4 billion, and his hedge fund has never had a down year. His career average return is 30% a year. That's incredible. So what's he doing now? Druckenmiller also just told investors to get out of the stock market and get gold. Today it's the biggest stake in this family fund with reportedly over $323 million in gold. How about John Paulson, who made $4 billion betting against housing? Most don't know he made $5 billion more getting in on gold in 2010, and now he's got another $1.2 billion gold bet in place. And here too, even the mainstream press is catching on. A headline on Bloomberg reads, "Make America Gold Again. Calls for everyone's favorite standard are back." CNBC says, "The bull market for gold is just beginning." And from RT News, "Central banks buying up gold to diversify away from the U.S. dollar." You see where this is headed. And here's the thing. We're already seeing gold shortages as investors get ready. Take a look at this alarming chart. Recently, I took a flight to Switzerland to visit one of the world's biggest gold refiners. Our host put me in a black SUV, had me turn on my cell phone, and took me into one of the most secure and secretive locations in the world, a large Swiss gold vault. He told me about his vault operations and explained how the bars get stacked. The newest gold bars are date-stamped and stacked by the door. Older bars get stored in the back. He says that orders are coming in so fast and his suppliers have to go so deep into the vaults that some of the bars coming out are date-stamped from the 1980s during Reagan's term. What you see in front of me is about $20 million worth of gold bars, filmed live in a secret location in Switzerland, inside one of the largest gold vaults in the world. Why go so deep into the stockpile? For one, gold sales to China alone are up 700% since 2010. Our refiner host told me that China's daily orders are so big, he actually has to limit their shipments. And it's not just gold buying from the Swiss. China's also soaking up 40% of all the gold coming out of the ground. What's more, Beijing just bought a London vault that can hold 2,000 more tons of gold bullion. Again, that's just China. Russia's buying at record levels too. And there are other central banks around the globe. Even here at home, gold demand is hitting its highest level of buying in 3 decades. What do they see coming that maybe you don't? Even worse, what happens if you wait too long until there's no gold left to get?
Gold's already soaring, well ahead of the transfer in global financial clout. You have to ask yourself, how high will gold prices go once we pass that milestone?
Like I've said more times than I can count. To viewers on the BBC, CNN, NPR, CNBC, Bloomberg, Fox, and in interviews with the Wall Street Journal, and in my latest book, The New Case for Gold, You could see gold prices soar as high as $10,000 an ounce. How is that possible? I lay out the exact details in the new case for gold. I'd like to send you a free copy so you can see for yourself. The bottom line is that if supplies are tight, and I just showed you that they are, the price has to go up. After a dollar crash, they have to swell high enough to shore up our money supply. At today's level, and after years of nonstop money printing, $10,000 gold looks like the safe bet. As you'll see in my book, some say it could go as high as $50,000 an ounce. Even at my number, you're looking at a 7-to-1 jump, at 632% above today's price. How do you know what to buy? You could get 400-ounce gold bars. You could buy 1-kilo bars. Or you could do what makes the most sense for most people, which is to buy gold coins. The U.S. Mint sells American Buffaloes and American Gold Eagles. Both hold exactly an ounce of gold, but I like the Eagles because they also have added alloy for durability. How much should you get? It's a simple calculation. I tell anybody who listens to take 10% of whatever they've got set aside, whether that's $5,000 or $5 million, and put that in physical gold. That's enough to build a foundation. As good as that is, there's still more. Like the one investment many will turn to when they get cut off from physical gold during the coming shortages, plus how to lock in your claim on royalties from rising gold sales. Or the 5 easy places to park your wealth, away from the political fray, with even greater protection than gold when it comes to potential government wealth confiscation. And how to lock in gold and silver ownership for tomorrow at a low fixed price. It's like getting a special call option on the rising price of gold and silver, with a long-haul expiration date. Plus income streams with a built-in hedge against a crashing dollar. As cash unravels, these income streams should go up. You can own a percentage stake as they do. You can find all these moves in a special bonus chapter of my book, The New Case for Gold. You won't get the special chapter from the copies they sell in bookstores or on Amazon.com. But my publisher can send you my special edition with the bonus chapter included, absolutely free. It could be the most valuable gift you've ever received. I expect these 5 bonus moves alone to show you at least a double, and that's even if gold only rises another 15% above today's price. 2 of the moves could triple or quadruple from here. If we see the full collapse I expect, you could see an extraordinary 30-to-1 return. You'll see how in your special edition copy of The New Case for Gold. If you accept the terms, my publisher will give you a free copy. Inside, on page 169, you'll find out about the super secret portable asset that's just as good as gold at storing value. It's not silver, platinum, or any other precious metal, and yet rich families have used it for centuries. Billionaires like Bill Gates and hedge fund giant Steve Cohen are using it right now, with millions invested in this asset. I explain why storing your gold at home could be a huge mistake. You don't want to trust banks or storage units either. The safest option for regular gold holders is the one I name on page 154. On page 165, I reveal the #1 gold buying mistake investors make. You should never ever buy gold this way, or you'll put your finances and yourself at serious risk. Page 154 shows you the single best way to avoid gold confiscation, even if you never store an ounce overseas. This is ultra-secure U.S.-based storage that's still outside our banking system. You'll also see why today's digital money poses a special new threat as the final phase in a 100-year plot to confiscate private wealth. Plus, I'll show you the 5 must-have requirements you want to demand from any gold storage provider, and the single best way to avoid getting your gold confiscated. I can also show you how to counter the 6 phony arguments against gold, and a foolproof way to prevent your bank from withholding your cash when the crisis hits the fan. Normally, my new book would cost you $25 in a bookstore, or you could pay $16 on Amazon. As I said, and with your permission, I want you to have a copy absolutely free. All I need is a valid mailing address here in the U.S. I'll get my publisher to put your copy in the mail immediately. We'll cover any shipping costs too. That way you get a great resource without any risk for yourself. But I'll let the reviews speak for themselves. The one thing you don't want to do is wait too long. Consider, even if the biggest gold buying institutions went from a 1.5% gold allocation to a 5% gold allocation, which is still lower than what I recommend, there's already not enough gold to meet that demand at today's prices.
And believe me, many of the insiders I know have got their eyes locked on the exact same power shift. You do not want to get short once demand really takes off.
All the proof you need, plus all the steps you'll want to take, are laid out in your free copy of my book. Let me hear from you while I've still got copies I can give away. Once you do, there's another step you'll want to take as soon as possible. Step 2, get out ahead of the collapsing market. In a widespread collapse, it's only natural for millions of investors to get completely taken by surprise. Usually there's no clear alarm bell going off. Usually there's no calendar deadline. Even I could have missed the signals in 2008 if I hadn't spent years developing my risk models and other tools. I could have lost a fortune on the crash of the dot-coms in 2000. Instead, I was able to use a special trading tool I developed to pick up 3,000% on the spectacular crash of WorldCom, the now-defunct telecom giant. In 1998, I was one of the few who knew how close we came to a global shutdown for stock markets, but only because I had a ringside seat as lead attorney for the LTCM bailout. My point being, even when you know what you're doing, a full-on stock market wipeout can take you by surprise. And we're seeing these mega busts on average every 5 to 8 years. We're now 8 years out from the last major downturn. Meanwhile, these global monetary busts come around every 30 to 40 years. And guess what? We're already out 45 years from the last major money collapse in 1971. Today, with even more debt on the table, even more derivatives lurking in the shadows, and even bigger, too big to fail banks than the last time around, does that feel safe to you? My risk models say dollar-based savings accounts and money markets alone could shed up to 80% of their purchasing power, and your stocks could plunge 70%. In fact, 1 in every 2 IRAs could go up in flames. That's why you need to be absolutely sure you're as prepared as I plan to be. To help you do that, I've got 2 more resources to send. You can also have them for free. The first one is called 1 Stock to Buy and 50 Ticking Time Bombs to Avoid. I'm going to show you at least 50 stocks you'll want to be free and clear of once the latest bubble on Wall Street comes crashing down.
I expect this to happen soon into the new year, if not sooner. When it does, these 50 stocks will likely lose half their value or more.
At a bare minimum, I recommend you check to make sure you're not exposed to any of these 50 names. If you're a more sophisticated investor, you might even want to short them. Even one of these shares in your portfolio is like holding a grenade without the pin. At the same time, you'll want to own the one must-buy I name in the same report. It gives you a claim on special streaming contracts to buy gold for as little as $400 an ounce and silver as low as $4 an ounce. These deals are already locked into place, which could send the shares skyrocketing as metal prices start to soar. As bad as things could get, the good news is that some of the biggest fortunes have been made during downturns. Think of people like oil man J. Paul Getty, who bought depressed oil stocks during the Great Depression. He made so much money, Fortune named him the richest living American in 1957. Or George Soros, who made $1.5 billion in a month on the crash of the English pound. Or John Paulson, who, as we said, made $4 billion during the mega market crash of 2008. That's why I also want to send you another one of my books, my 263-page work, The Big Drop. It shows you exactly how to get your money to safety. When we first released it in a limited edition, you couldn't get it on Amazon or in any bookstore. It was so popular, my publisher begged me to update it. This is the result. Nobody has seen this new version. You'll be the first. Inside, you'll get a brand new blueprint for how to save and grow more of your wealth during what could be the biggest financial crisis that Wall Street or America has ever faced, including what to do now if you've got a huge portfolio of stocks. This could save your bacon if you take this step before there's a 3,000 to 4,000 point drop. The fastest way to judge the true safety of your bank. If you do any digital banking at all, please read this. The U.S. government's shady plan for paying off debt by simply deducting the money from your bank account every month, and much more. Plus, this book also comes with a special legacy chapter you can't get anywhere else. It shows you an easy way to make 80% as market indexes collapse. During the last bust, the same investment shot up by 75%, as the S&P shed about half its value. This time around, it should soar even higher. An insurance investment that could jump 500% during the crisis. This company went public in December 2007, right before the financial panic. Yet while the S&P was losing half its value, investors in this unique company doubled their money. Overall, it's up over 250% since it started trading, and I expect it to perform even better during the collapse. Why you should not worry about whether we will have inflation or deflation, and what to do instead that will safeguard your money and earn a nice return no matter what happens. That's just a glimpse. Again, the second book I'll send you is called The Big Drop. Between that and my report on the top 50 toxic stocks, you should have more than enough to help you escape the massive losses I see ahead. That alone could be worth thousands of dollars to regular savers and investors. But the big drop is also yours free. It's worth it to me if I can help you protect more of your money from scheming banks, manipulative government planners, and dishonest money advisors. And then once you protected what you've got, there's one more step. I don't know a single soul out there that's figured out how to do what I'll show you now.
In short, this is the only way in the world for you to hedge your wealth against this October trigger event.
By letting you shift some of your own dollars into this new elite asset. Step 3, get your own world money while you can. As I said, right now, there is no official way for you to own world money. As it stands right now, this new cash is only for the financial elite. And yet, once this new form of global money takes over as the world's top form of cash, it also becomes a potentially huge hedge against the downward spiral of the dollar. And I firmly believe it's only a matter of time before that takes place. Consider, The Economist has been predicting the arrival of a new kind of world currency going all the way back to 1988. And even then they said it would arrive by 2018. Here it comes, on schedule. Every day over $5,000 worth of money changes hands worldwide. How fast will those buyers and sellers switch to a single centralized world money to ease those transactions? Meanwhile, at least 23 countries, including Germany, France, and the UK, have already set up banking swap lines to help ease their transition away from the dollar. Coincidence? In short, the rest of the world is already getting ready for the switch to world money. Shouldn't you be? Like I said, you can't officially own this new kind of world money yourself. However, I put together a way to own an unofficial stake in its future. Not only is this unofficial way perfectly legal, it's the only way I know of for any private citizen to get access. And you can get this into place right now with a few clicks of your mouse. As you read this, I happen to have the only private link in the world that will get you in. I'd love to lay it all out for you here, but it's worth going into in more detail. That's why I've written it all out for you instead in another brand new report called The Only Way to Own the New World Money. Inside it shows you exactly how this works. It's nothing super risky like trading Forex. Instead, it's a little-known kind of account that gives you an advanced stake in the rise of new money bank reserves. This is the single easiest way I know of for you to do this. It's also the only way if you're not one of the handful of world financial elites. You don't have to be wealthy to make this work. All you need is the private web link that gets you started. Only a tiny number of people in the world happen to have it. I'm one of them. Once I share it, you'll have access too. I don't get a commission or anything for sharing it with you. Even still, I'll show you exactly how to set up the special World Money account for maximum exposure to any gains. After that, you can rebalance your assets in this account however and whenever you see fit. There are no money managers involved. You'll have complete control of this special World Money account, and I'll have the complete satisfaction of knowing you're ready to preserve your wealth and possibly collect a fat double-digit return ahead of the World Money deadline. It's that simple. The private link will give you access. I'll give it to you and explain how to use it in your free copy of this additional bonus report, The Only Way to Own the New World Money. Altogether, that gives you 3 powerful ways to protect yourself.
You're getting a way to get out of the dollar before it crashes, to get out of the most dangerous U.S. stocks before the latest market bubble bursts, and to get into this unique world money hedge ahead of other investors, plus the wealth protection of physical gold, and all before the trigger event on October 15, 2017.
To sum that up, you'll get a free copy of my new book, The New Case for Gold. You'll get the legacy chapter from my book that you cannot get via bookstores or Amazon. You'll also get a second free book, my fully updated edition of The Big Drop. I'll rush you 1 stock to buy and 50 ticking time bombs to avoid, so you'll know which shares to dump immediately and what to own instead.
You'll also get my new free report, The Only Way to Own the New World Money, which lays out the only way for private citizens to get access to this new currency before it goes out to the public.
That's a lot of my best research, and I'm offering to give it to you right now for free. No questions asked and yours to keep. Why would I want to do that sight unseen? Because I want something very significant from you in return. I'd like your permission to start sending you the rest of my research in a service called Jim Rickards Strategic Intelligence.
See, I believe you'll need more than just a few short-term ideas, because this new power shift away from American influence isn't the only looming threat to your wealth. Debt, negative interest rates, instability in China and the EU, political incompetence both here at home and around the globe. This is a long-haul transformation.
That's why I want to build a long-term quality relationship with readers like you. People who will take the research I want to give you and put it to good use. Again, I'm not a broker. I'm not looking to build my list of private clients. I just know what it's like to lose everything, and I know what it takes to prevent that from happening again. See, I grew up in a family that had to claw its way out of bankruptcy twice. Today, I'm lucky enough to split my time between a luxury mountain home in the Northeast, a house on a private island in an upscale town in Connecticut, and visits to gold vaults in Zurich. That's not an accident. I've dedicated the last 35 years of my career to building a research network and establishing the right kinds of connections. I've met with Nobel Prize winners and 2 former heads of the Federal Reserve. I've worked alongside billionaire investors and counseled prime ministers. I'm not stuck behind a Bloomberg terminal in a Wall Street brokerage. I get to sit on the front lines where the moves that shape markets get made. As a geopolitical consultant, I get to meet the movers and shakers and get a read on what's really coming down the pipeline. I don't want to lose that. I don't want any other Americans to risk losing what they have either. That's why I want you to have so much of my research for free. It's also why I'm asking you now to accept a simple 1-year trial subscription to my research letter, Strategic Intelligence. It's not expensive. Even though I share a lot of the same tools and ideas that I've gotten paid to develop for the CIA and the Pentagon, rich American families and top Wall Street firms, and the same research. Simply agree, and over the next 12 months, my team and I will be in your corner, alerting you to new risks, debunking lies from the monetary mafia that controls world markets, and much more. Mostly what I'll do is show you how to keep more of what you've got, and gain new wealth too, even as the status quo gets turned completely upside down over the months ahead. You'll get updates from me and the team every 3rd week of every month. And you'll also get the reports we talked about, my 2 books, The New Case for Gold, and your updated special edition of The Big Drop, and full private access to the member website. This should be more than enough to protect and grow your money over the rough years ahead. Look, I don't need your money. I've already made my fortune. But like I said, I don't want anyone to suffer the way my family did. They're all good, hard-working people, and their 2 brushes with financial ruin nearly destroyed them. If they'd only understood the risks they were facing, that might never have happened. If I can give you the chance they didn't have by helping you understand the coming bust and how to protect yourself, then it's more than worth the cost and time it takes me to put all this together. I can't give all of it away, but I'm only asking you to pay just $49 for the full year. That's just enough to cover my publisher's expenses, and again, that's a trial price. You can get it all back if you change your mind. Along with your trial, you'll get the 2 free books, worth more than your trial fee all by themselves. Plus, you'll get my free report on the only way for regular investors to access world money gains, and your bonus legacy chapter, not available anywhere else. What's all that worth to you personally? I can't really say. Depending on how much carnage lies ahead, it could be worth everything. But just to be safe, here's something else I want you to have.
While events like these loom, the market won't sit idle. That's why I also want to invite you to join me every month for a special video intelligence briefing between issues, especially now as we get closer to the 2017 trigger event.
I'll walk you through the unfolding currency war. I'll tell you exactly what I've heard from the Fed and how it could shape our wealth protection plan. Also, you'll hear from behind the scenes. During the video call, I can't cover your personal financial details, but I'll take time to answer the most frequently asked questions and to share all my newest findings with all my viewers, just to make sure you're ready for anything as we get closer to the date. Again, keep in mind, I've charged as much as $15,000 to share these kinds of insights in seminars and private investment conferences in the past. I've decoded events like this for the CIA. I've even worked as a paid advisor for the Pentagon. But you won't have to pay for these live inter-issue briefings the way they did. In fact, you won't pay to attend my live briefings at all. They'll be fully included with your trial membership invitation.
After that, you'll keep getting members-only invites for even more video briefings each month. So you'll always be ahead of the headlines and big shifts for the market.
These briefings are included at no extra charge. I think you'll agree that adds up to a pretty good deal. You'll have everything you need to safely weather the storm ahead. You'll be getting plenty of chances to grow your wealth too. But there's still one more thing. What if you could own gold with a safety net? That is, what if you could own both sides of the gold trade? On the one side, you're covered even if gold tanks for the next 18 months. On the other, you could make up to 1,233% if it goes up. Because I've got a way you could do just that. To be clear, it's not for everybody. And I call it the safety net because you've got a chance to see gains regardless of whether gold goes up or down. But there actually is risk if it doesn't pan out at all. No investment is guaranteed. However, we put the strategy through the paces on a dozen more likely scenarios. The potential profit ranges from nice to enormous. In one more extra gift report, I spell out how it works, including how you can see between 133% to 289% on the lower end, or sit tight for extraordinary gains as high as 1,233%. And that's if gold soars to only half of what I predict. If it hits $10,000 an ounce, and it could, get ready for an even bigger return. The way I see it, you're covered no matter what. And for all that, you're paying less than 14 cents a day. All you need to do is click the Reserve Now button below to get started. You'll get your reports immediately. Your copy of my book will arrive within days. My monthly strategic intelligence briefings will follow close behind. You've got the full year to decide if it's for you. If you decide to cancel, keep everything I'll send, even both free copies of my 2 books and all the reports I promise to include. There's a friendly on-site customer service team you can call using the number you'll get when you click the button below. When you click the Reserve Now button, you'll go to a secure page where you can review all the details. You'll also have a space to tell me where to send your free book. Don't worry, you don't commit to anything when you click the button. You'll have plenty of time to tell me you're ready. But I can't send you your free copy of my new book, The New Case for Gold, or anything else I promised until I hear from you. Let me know as soon as possible.
The way I see it, you have 3 options. Either you cross your fingers and sit tight, hoping that whatever follows this October 15 trigger event will be nowhere near as dire for the U.S. dollar and the U.S. stock market as I say it is. Just ignore everything I just revealed. Pretend it doesn't exist. I'll send you a free copy of The New Case for Gold and everything we talked about to someone else. Or your second option, you could let me show you what to do right now while you still have time. I'll rush you everything so you can start protecting and growing your wealth immediately.
That includes your first trial issues, your instant market updates, your free copies of The New Case for Gold and The Big Drop, plus all the other wealth protection research we talked about. That way you're ready now instead of wishing you'd taken action down the road. What's your third option?
Well, you could always wait to see what happens when our new president takes the White House. Who knows, maybe they've got an answer you and I haven't thought of, though I doubt it. If you've got no interest in knowing how to hedge your wealth now against this trigger event and subsequent dollar bust, against the market collapse, and against all the other bad outcomes I see in my risk models, then I completely understand if we part ways right now.
On the other hand, I could just as easily rush you everything immediately so you can start protecting and growing your wealth today. The choice is up to you.
Again, let's make this perfectly clear. After this trigger event and the fallout, you could see hundreds of billions of dollars in wealth start changing hands.
And it could be overnight, and the smart money is already taking steps to protect themselves. If you care anything about your financial future or your family, you should take steps too.
Is that none of these are isolated events. They're what I call force multipliers, combining in a way that could already undermine your savings, send prices for most things soaring, and blow apart the U.S. market. But now there's been a much more alarming development. In short, on Sunday, October 15th, there's a single event scheduled that could topple the last domino and trigger the final end of the American empire. Pay close attention because this message isn't just another warning about the dollar. What's coming is much, much bigger than just a currency move. We're about to witness a complete rewrite of the global financial rules, ending with the destruction of the entire American empire and all the influence and worldwide dominance we've come to take for granted. If you plan to have any money at all in the stock market, in US-based bonds, CDs, or savings accounts, even in gold, you need to take steps to protect yourself. I named 3 of those steps below. I'm urging you right now, please pay attention. There's a reason we don't speak Latin in boardrooms, movies, or on the nightly news. It's the same reason India is no longer a British colony, and that the French and Dutch no longer share huge tracts of Africa. In short, it's because empires, all of them, end. I'm writing you now because it's America's turn. As a citizen that served my country many times before, including advising the U.S. intelligence agencies on matters of national security, believe me, I take no pleasure in seeing our empire crumble. I don't want to see these events play out. But the fact of the matter is this, it's simply too late to reverse course. Because on October 15, 2017, a Sunday morning,
in a room that hosts the world's most powerful financial elite, a long-awaited, fully scheduled trigger event could take place.
When it does, you could see the already rapid decline of the American empire pick up pace. How so? Like I said, my name is Jim Rickards. I spent the last 43 years studying the combined impact of exactly these kinds of events. For 35 of those years, I was both an attorney and risk analyst on Wall Street. I've warned investors in 2 New York Times bestsellers, Currency Wars in 2011, The Death of Money in 2014, and in my latest book, The New Case for Gold. Maybe you've also seen me making the rounds on just about every major network. I've been showing up on Fox News, CNBC, CNN, and Bloomberg. I've been called in to share my findings with the CIA, the Pentagon, and other high-level insiders in both Washington and on Wall Street. Time after time, I've laid out the case for how our reckless Fed, the rise of digital cash, and our global currency wars are already targeting the U.S. dollar and our way of life. Most recently, I told investors to watch out for a very specific attack on the dollar that would take place on September 30th. On that date, I said the world's most powerful financial body would release a new form of money specifically designed to replace the U.S. dollar as the world's reserve currency. That release, we call it world money, did happen just as predicted. And those are just some of the reasons that I famously called for gold to climb to as high as $10,000 an ounce. Yet, as worrisome as all that is, now there's something more, a new development that still lies ahead, and one that should alarm you more than all these other events combined. I promise you not one American in 100,000 knows about this threat, let alone how it could shear the top off the U.S. stock market, how it will cannibalize your retirement savings, and why it's this event that could speed up America's rapid decline. Before I tell you what it is, let me show you what it could mean. Soon after this trigger event, you could see central banks worldwide empty dollars from their vaults to make room for the replacement currency I've just told you about. You'll see just how fast the world stock markets can fall off a cliff, faster even than in 2008, as governments and Wall Street scramble to adjust to this new reality. You'll find out just how fast an event like this can gut your savings account too, and hike up the prices you pay for everything, from fancy gadgets to basics like groceries and gasoline. Soon after this trigger event takes place, you'll see our global credit card get snipped in half, as the world loses every last reason to tolerate our exploding piles of debt. Remember, you need 15% at the IMF to get veto power. In fact, Vladimir Putin himself said at that meeting, "We're a step away from the 15% blocking threshold. Without a doubt, we have to move forward to carry out an IMF reform." This is exactly the move that will get triggered by the event in October. The G20, including Obama and the IMF, have given a written promise to crank up the BRICS voting rights to match with their relative positions in the world economy. Allow me to translate. The BRICS now run 22.4% of the world GDP. They now get just 14.9% of the vote in world financial decisions. They only need 0.1% more to get veto power. Chances are they'll get more, as much as 16% or 17%. So let's take a look at that same pie chart again, and keep in mind they only need 15% to match the total U.S. firepower and votes. The bottom line, if the BRICS gain enough firepower to veto U.S. proposals, they could twist arms to the other member countries against our interests. Once they've got that power, will they use it? Keep in mind, this is the same BRIC group that was so anti-U.S. control, they launched their $100 billion BRICS New Development Bank in July 2015. It's the same group that was so intent on skirting U.S. wiretaps, they launched a plan to start building their own undersea internet cable back in September 2013. And it's the same group that at this most recent G20 meeting actually broke off and had a mini summit of their own to figure out how to force this vote reform. They are not hiding their intent. And this is not a prediction or a guess. This is a fact. And the fact is, the BRICS will soon have the clout they need to make this a very different world. A world that's less focused on the U.S. as the number one economic power, and there's nothing anybody, not even President Trump, can do to stop it. That's why I've chosen to forego advising the U.S. government this time around, because it's too late for them. Instead, I'm here advising you, my fellow American, on what you can do while you still have time to prepare yourself and your wealth for this huge shift ahead. And what do they plan to do with all this veto power? All of them make no secret about ending the reign of the dollar. In fact, behind the scenes, these nations are already maneuvering outside the dollar. For example, did you know that Russia and China have already cut a deal to allow their currencies to trade against each other without the dollar involved at all? Or did you know that India, China, Russia, and 20 other countries have already set up lines of currency swaps that allow them to trade without using the U.S. dollar? After October 15th, these nations will not have to operate in such secrecy anymore. Instead, they'll have the votes, the new IMF world money, to make it happen right in front of everyone's eyes. They'll abandon the dollar and put in place this new world money at exactly a time when most Americans are least ready. In fact, I'll bet you not one American in 100,000 has any clue what this event will mean for their money. Why are so many Americans in the dark? Simple. Unless you were born before 1944, there's a good chance you've got no idea what it's like to live in a world where the dollar wasn't the world's most powerful form of cash. That status comes with huge benefits. Benefits most Americans have no idea they enjoy. Did you know, for instance, that 85% of all the transactions that take place between other countries outside of the United States take place in U.S. dollars? Say China buys a dozen shipping containers full of French Bordeaux. They don't pay with yuan or even euros, they pay with dollars. If Canada imports a few hundred Honda Civics, they don't pay with Canadian cash or Japanese yen, they also pay with U.S. dollars. The same goes for England when they buy Saudi oil, or Brazil when they import Swedish chocolate. As of right now, all that money gets transferred as dollars. Why? Because using one kind of money makes it easy, and dollars up until now have felt stable. That's why dollars make up more than 60% of reserves in other countries' central banks. You might not know it, but we've got a lot of perks as long as this remains true.
For instance, dollar dominance is one reason you pay only $2 a gallon for gas, while drivers in Italy fork over $6 per gallon, and they pay $7 a gallon in Oslo, Norway. It's why China and Japan have lent us trillions of dollars, and why our government thinks they can just keep on borrowing that money forever instead of getting their books in.
You'll see our leaders completely humiliated on the world stages, losing all leverage in all their negotiations, from world trade to a global response to terrorism. You'll see U.S. tax rates soar in response as D.C. loses its sway at global treasury auctions and scrambles for another source of cash. You'll see how this development cuts into government social programs from Social Security to Medicare, and cuts our spending on highways, bridges, and border security. You'll even get to see inside a Swiss gold vault as I show you what our visit reveals about how other countries, especially China, have been prepping for this power shift for years. Will this be the ultimate monetary apocalypse? Not exactly. In fact, it won't even be the first time we've seen a currency implosion in the past 100 years or so. We've had others in 1914, 1939, and 1971. What I am warning you is that this new trigger event in October will speed us faster toward the next collapse, more so than anything else we've seen this year. First, it will amplify the trend. Then it will knock away the final pillar that's holding up the American empire. It's got nothing to do with our new president. It's not a terrorist attack. It's something far simpler, far less obvious. It's a financial event that will make the end of the U.S. dollar, and by extension, the end of our reach as an empire, inevitable, and much sooner than most of us imagine. Fortunately, there are steps you can take to protect yourself. I'll spell out 3 of them here. All 3 are steps I hope to take too for myself and my family. None of them are complicated. All of them could shelter you during this next phase of the coming crisis. The first will show you how to hedge yourself and your wealth against what could be a rapid backslide in the U.S. dollar. It could even show you an extraordinary 8-to-1 return. The second reveals how to avoid what could easily be another 2008 level wipeout in stocks. Specifically, there are toxic, well-known shares you'll want to dump. Plus, you'll see how to make money on the same downward move. In my own career, I've made gains on falling shares as high as 3,000%. Then you'll see a radical new way to get ahead of this trigger event, and the move to dethrone the dollar that could follow by owning a stake in a currency set to replace it. This last move would normally not be possible for most regular investors, but I found an original, accessible way to do it. I know of nobody else who's identified it. The bottom line is you don't need to feel helpless. Not only can you use what I'm about to show you to preserve your wealth and protect yourself long after the fallout from this October trigger event,
You could get richer, too.
that's what history's wealthiest investors always figure out how to do. It's what I want to show you how to do now. And once you're ready, there's more. Including a simple formula I've worked out for gold buyers. It shows you exactly how much gold you should own according to your total net worth, plus what kind of gold, where to buy it, and how to safely store it. You don't want to keep it at a local bank or in a safe deposit box. Also, there's an extraordinary way to lock up returns as high as 30 times your money if this coming dollar collapse goes as deep and as far as I expect. But before we get to any of this, let me tell you a little bit more about where this warning comes from and why I'm in such a unique position to help you survive it. As I've said, if you haven't already seen me on the national news shows, you might know me from my 2 New York Times bestsellers, Currency Wars and The Death of Money, and my latest work, The New Case for Gold. For 35 years, I worked not just as a lawyer, but as a risk analyst on Wall Street. I ran the market intelligence firm that exposed new global currency manipulation. In 2009, I testified in front of Congress about financial modeling and the 2008 crash. But it's my work behind the scenes that gets me special access most others don't get. For instance, maybe you remember Long-Term Capital Management, the giant hedge fund that blew up in the 90s and almost took down the entire world stock market. I was the lead attorney on that case, called in by the Fed to negotiate the bailout. A few years later, the CIA called me in just after planes hit the Twin Towers in New York. They wanted me to help scan the markets for strange big trades, like big bets on airline stocks. We figured it would help us expose even more planned attacks. In 2010, I did something similar involving New Scotland Yard. We used my risk models to uncover a terror plot in London just days before it was set to happen. And in 2009, I got called in for a closed-door meeting at the Pentagon.
Order. It's why you still get a welcome mat when you whip out American money overseas, especially in countries that still cling to the idea that America's got a stable economy. The list goes on. But what happens to those perks once the dollar's top dog status just disappears? Make no mistake, you'll lose every one of these perks. When world money takes over, the first thing that America loses is our #1 export. No, not cars from Detroit, not shale oil from the fields of South Dakota, not steel or movies or info technology. As you read this, our #1 export is the dollar itself. That's what we're doing when we buy anything from overseas. We offload tons of stuff from shipping containers and send back hundreds of billions of dollars in return. That exchange only works while they still have faith in the greenback. What happens when faith in the new world money takes over? Again, simple. Suddenly our VIP treatment goes away. We have to line up for special deals and special access to markets just like everybody else, and pay the same exchange fees for the privilege. Translation, you'll pay more, a lot more, for just about everything. Here's something else. Right now, more than 20 currencies also peg their money to the dollar. That means they keep their money strong by backing it with our money parked in their reserves. What happens when world money suddenly becomes the better option?
Bank vaults worldwide could opt to swap dollars for world money. This could send a tidal wave of cash back to the U.S.
And you know what happens when there's too much of anything? It makes everything that's there worth less. Imagine paying twice what you pay now to buy a car, an iPhone, or gasoline. Companies that do business overseas could see every cost advantage vaporize. Will that bring jobs back home too? Don't count on it, because weaker dollars will make their costs soar here too. You could see mass layoffs. Some companies will just shut their doors forever. They won't have any other option. Of course, that will slam the stock market. As global investors flee, you could see stocks crash 50%, 60%, or more. Meanwhile, what happens to that steady flow of borrowed dollars from China, India, and Japan? Nobody will want to get paid back in dollars. They'll want world money instead. You can imagine the shock and embarrassment when a cashier takes your credit card and cuts it in half. Now imagine that happening on an international scale to the U.S. government. When our politicians can't borrow from overseas, they'll only have two other options: either print the money and risk even more inflation, or take it by theft with European-style taxes. Either way, you lose. But maybe you're asking, why now? After all, hasn't the dollar been dying for decades? Yes, it has. Take a look at this. As you can see, our money has plunged a staggering 96%, starting with the day our Federal Reserve opened its doors. If you got that return from any other investment, you'd dump it immediately. And yet we're used to this. We accept it. Of course, we tell ourselves all prices go up. It's natural to pay $500,000 for a house that once sold for just $10,000. It's natural to fork over $40,000 in tuition for a college that once cost $400 a year. It's normal to pay $5 for a Coke in a restaurant or $60 for a ticket to a ball game, because that's what paper money does. It dies over time. In fact, did you know that there have been over 3,400 kinds of money that work just like the dollar? That is money that's backed by nothing but the faith of the people who use it. And guess what? Every single one of them has failed. On average, most didn't last longer than 27 years. After 72 years on top, the dollar has already lasted for triple that lifespan. We're lucky it's still standing at all. But how much longer can that last?
When a country is divided as ours, with our economy in shambles and others joining forces against us, and with pitiful leaders adding debt by the trillions, not long at all. Even without the coming trigger event in October, the stars are lining up for a dollar collapse.
What's different this time is that, for the first time in the dollar's history, we've got an actual deadline. A date when it could all go down. And believe me, I'm the first to tell you that I'm the lone wolf with this kind of warning. Just look at how even the mainstream has started to echo a similar story. Here are the actual headlines from the papers that even your typical mom and pop investor would follow. The Wall Street Journal writes, quote, "The single most astonishing fact about foreign exchange is the extent to which the market remains dollar-centric. The dollar's reign is coming to an end," close quote. Well, quote,
to create and oversee their first ever financial war game simulation to expose security weaknesses in U.S. banks. The good news is that my team and I won that game. The bad news is we were playing as the Chinese team. Listen, bottom line is this. I've spent years cultivating these same risk analysis tools I'm about to apply for you today in this presentation. In all that time, the alarm bells have never rung as clearly as they're ringing now.
You'll need to understand the risks. You'll want to know what to do to get ready.
And you want to do all of it well ahead of this October trigger event and its outcome. Otherwise, you could lose everything. I'm in a unique position to help clarify that risk. I'm in an even better position to show you how to protect yourself and your family from the coming fallout. Now let me tell you what this event is and why it could have so much impact. First, let me ask you this. When you hear the phrase financial elites, who comes to mind? George Soros, Warren Buffett, Bill Gates, Trump, or Bloomberg? They're rich, but they've got nothing on this crowd. I'm talking, of course, about the group that runs what The Economist calls the most powerful financial institution on earth.
A group that's got their finger on the button of the entire global economy and holds the fate of trillions of dollars hostage with just a few strokes of a pen. Maybe you've guessed. I'm talking about the heads of the International Monetary Fund.
But what's that got to do with this trigger event coming for this fall? Consider, the IMF has 189 member countries. And many of these countries would love to move away from the one thing that's made the American empire so powerful over these last 70 years. Not our military might, not our diplomatic reach or our ingenuity, but nothing short of the current worldwide dependence on the fate of the U.S. dollar. Up until now, it's the dollar that fills the central banks of the world, and the dollar that's used for just about every large-scale transaction between nations, even those doing business with partners other than the U.S. You can't begin to imagine what huge advantages that's meant for us as masters of that reserve currency, or what a drag it's been on other economies at the same time. See, dollar reserves come with baggage, namely our explosive $19 trillion in debt. Meanwhile, the member countries look at the IMF and it seems like an oasis by comparison. They've got no wars or no roads to pay for, no welfare recipients, and no social security checks to write, and nothing close to our levels of debt. For the rest of the world, the IMF has the last clean balance sheet. And the way they see it, it's the IMF, not the United States, that should hold the strings to the world's purse, with centralized money, a centralized market, and even a centralized government. The centralized money these other countries could use already exists. It's the world money I told you about earlier. All that remains is the vote to swap it into place. This is what could follow the trigger event on October 15, 2017. Up until now, only one country in the IMF's 189 member countries had enough power to veto a vote against the dollar, and lucky for us, that country was the United States. See, the way the IMF works is each country gets a certain percentage voting clout. Here, take a look at this chart. As you can see, the U.S. is the only country with a percentage over 15%. That's exactly enough voting power to veto any IMF proposal. Up until now, it's why it's been easier for the U.S. to call the shots. However, this coming year, 2017, those quotas are set to rebalance, and they're going to rebalance away from U.S. interests like, say, keeping the dollar as the world's #1 reserve currency. How so? Maybe you remember hearing about the BRICS countries. BRICS stands for Brazil, Russia, India, China, and South Africa. Not one of those countries is a match for the U.S. on the voting floor or in the world economy, but banded together in 2017, they'll finally have us beat. Consider our share of the world economy has plunged by nearly half since 1960. We're now cranking out just 25% of the wealth of the world each year. The BRICS have soared in size with combined economic might that's nearly triple what it was in the 1990s, bigger than the size of the EU, and nearly equal to the United States. When that chart you just saw was made, the BRICS share of the vote totaled 14.2%. At the G20 meeting that just happened, it bumped up to 14.89%.